Craig Martin again, and this video is on how to play the market retracement. You notice I've called it a retracement, not a correction or shakeout, but really the market's gone down 1.2%, and on a technical basis I expect it to go down a little bit further. So this isn't a comment on fundamentals, pure technical analysis. And so what I'm doing in this video is just giving you an idea of how I've played it and how you might want to play it. The first thing is I do believe that there is an opportunity to short the Satrix. So you can use any EFT you want to. I chose the Satrix 40, and what's actually happened is the Satrix 40 during the bull run tended to run just slightly above the index, and now you can see that gap has narrowed yesterday when the market looks like it was about to turn, and so you've actually got better performance out of shorting that Satrix. So keep that in mind. The market could still drop another 3.5%, and so a short position on the Satrix is worth playing. But that doesn't mean that I'm going to then get out of all my shares. So the Satrix is where I get the extra buffer out of performance. But some shares that I've recommended as buys is Metal. I did warn about practicing a stop loss if it dropped more than 15% from the previous highs, but it hasn't done that, and so I'm still in this position. And as you can see, it's trending towards overbought territory, but has had really a nice run up. If you look here, it's in a bull position, although this black line of the ADX would have to be above the green for it to be a true bull trend. But the point that I want to illustrate from this graph is you can see that it has really underperformed the Aussie. So I don't think the correction in the Aussie is going to affect Metal too much. Old Mutual has been much the same situation. It started participating in the bull run, and then it broke away and lost favor, and so you can see that it's also been in a very recent bull run. Here the ADX is above the green line, and so Old Mutual is in a bull run. It is obviously also heading in overbought territory, so there is some caution that's needed there. But if you're a long-term investor in Old Mutual, there's no need to rush out and expect huge fallbacks. Woolies, it participated with the run in the Aussie, but started to diverge when retail shares started to lose a bit of favor around the beginning of December. Right now it's oversold. There's no clear trend on Woolworths, but if it's a portfolio play, hang on to it. There's no reason to rush and sell. First Rand, well, it's a bit of a different story. We recommended a buy in the share, and from a long-term point of view, although it's run very nicely from the low 18 rands, I did sell out of my First Rand yesterday, and you can see it's run ahead of the market, and I do think there'll be some pullback, although this morning in Asia the financials, especially the small bank stocks, are doing very well. So it's really your own call, but the share is in overbought territory. But what's very interesting is it is in a bull run. So you don't normally want to sell short a bull, and that's certainly something that I would avoid at all costs. But if you want to reduce your position, you're very welcome to. Metarex, here again very clearly you can see that Metarex has outperformed the Aussie. This is mainly a copper play, and that's why we've got it in the portfolio. There will be some volatility in this. It's a small cap share, but it's still very much in a bull trend. It is in overbought territory, but you would expect it to be overbought when it's in this bull trend. And I have reduced my holding in Metarex. That's a call that you would have to decide to make if you want to bank some profits, but I certainly wouldn't get out of the share altogether. Sasol, it's also a longer term play of mine. I think the oil story is still good. The share is in a bull trend, and I have kept my position in Sasol, but tends to perform more or less in line with the market over time anyway. Zeda, again in a very clear bull trend, although it is going into overbought territory. The share has outperformed the market, and I think it's got some defensive elements to it, so I wouldn't be rushing out to sell. Naspers, I haven't written too much on this forum about Naspers, but it has been one that I've been in and out of, and it's obviously performed pretty well. I will be writing about NASPAS shortly. No clear trend on it at the moment, so if you're in the share, you may want to look at banking some of the profits, but I'll be writing about that shortly. So hopefully that's given you some guidance, but remember that the Satrix 40 EFT is there. It is an opportunity just to short that, and then you don't have to necessarily change anything else in your portfolio. But have a look at the graphs. Some shares have run harder than others.